Well, it's good to see everyone here today. My name is Walter Peters, and the cam's okay too? Excellent. And today we're going to talk about some naked trading. I see a couple of familiar people here. I think Jose's here, and Manoj is here, Alex. Thanks for taking time today to spend time with us. We're gonna look at some indicator. Hey, Boyke, there's Boyke. I thought I saw you on there. Yeah, right. So what we're gonna do is we're gonna take a look at some charts here. Let me drop this chart down. You're looking at the euro right here. What I'm gonna do, I've been getting some questions from people about the trading, the naked trading, and whether or not, different time frames and that sort of thing. Now, while I have a definite preference for daily charts, there's no reason why you can't use these naked trading systems that we're going to talk about today on other time frames. The only real reason I prefer to use these systems on daily charts is simply because of the time factor, and that I don't like to sit in front of the computer. So let's look at the euro daily chart. And what I'm going to do, actually, I'm going to change the color on that. And I'm going to draw, how about red? What I'm going to do on this daily chart is I'm going to sit here and draw some lines on our daily chart, and then I'm going to drop down to the 4-hour chart. So here we've got our euro daily chart, and I'm just going to put, and this is what I generally do when I get a new chart. If I've got a clean chart, I'll just put some lines, some zones on here, and these are going to be areas where we found both support and resistance on the chart. So for example, on this move up here on the euro, it came up to this 1.4820 level and then fell. And when it finally did break through this level, it also found support there. And that becomes really clear when I go down to a line chart here, which I've done just now. When I move to a line chart, these sorts of things become quite clear. So what most people do when they first get started playing support and resistance is they'll just use line charts to find these zones, and they'll really stick out when you do this. So I see it looks like there might be another one right around here. Okay, so that one's there about 38.60. And we've got one down here as well, right around 25. I often hear people ask me, is it more important to use round numbers when you're looking at your zones? Not particularly. I suppose it's nice if it works out that way, but it's not always the case, obviously. Now, I've got some zones here. Let me see if I can find another one. In fact, I think there's one right here. Right about there. Now, what's interesting about this zone at 1.2985 is we can see that on this day back here in April, the euro actually closed on this zone. It did break through the next day, but you'll see here it went down to the next zone at 1.25 a couple days later, then came back up and touched our zone at 1.2985. So it was support in that it held that day. It did break through, but when it came back up, it touched it again. And then obviously we had another touch up here in July. I really like to see more touches. More touches the better, really. Okay. So now we've got the lines on here. I'll move down to the 4-hour chart and see what sort of action we've got going on. All right. Now I've got my zones here, And some of them are going to appear once you go down to your lower time frame, which in this case is the 4-hour chart. So I'll do those in a different color. Make those blue. And we may have some more. Oh, we certainly do, don't we? So I may place a little bit more emphasis on those that are better, that are on the higher time frame. So based on the 1-hour chart, or sorry, on the 1-day chart right here, I've got my blue, my red zones drawn, and then based on the 4-hour chart, I've got my blue ones. So now we're set. Now all we really have to do is wait. So, for example, right here, what we've got is we've got a situation where the euro is traveling down, right, obviously, but we have a couple of spots where we might wait for the euro to show its hand. So for right now, I'm probably going to look at this area at 1.2985 as an area where I'm going to watch the euro to see if perhaps we get a clue as to what's going to happen. Now, one of my favorite clues are these bars right here. These giant bearish, what I call bearish big shadows. Bearish big shadows are bars that completely engulf the prior bar. Now, there's a couple of other things that are nice that we like to see on these setups. One is that these bearish big shadows should be, it can be a bullish big shadow as well, but in this instance, obviously, it's a bearish signal. One, what we see is that the formation is, it sticks out. It looks like it has some space. So if we look to the immediate left here, we don't see any bars immediately in the same price range as the bearish big shadow. So that tells us that it's a possible extreme right here. Harley's asking about the lowest time frame. It really doesn't matter, Harley, but what is critical is that you move one time frame up. What I found is that my zones will become much more reliable if I move one time frame up to draw my zones and then drop down to my trading time frame and look for my signals. So in this instance, because I'm trading the 4-hour chart on the euro, I've drawn my zones as daily zones, which is just simply one more time frame up from where I'm at. So for instance, if I'm trading, the daily chart, I'll look at the weekly zones. I'm certainly going to draw the zones as I see them on the time frame I'm trading off of, which in this case, of course, is the 4-hour chart. But what I found is that if I trade off these higher time frame zones, I'm much more likely to see price reverse there. Yeah. So basically what happens is I consider these blue, these red zones to be my major support and resistance zones. And again, they're zones, so we look for price to reverse or hold around this area. Not necessarily right on a dime, reverse, turn around, go, see you later, but just sort of around this area. So because I've got these red lines drawn on my daily chart, I'd say that these zones probably have a cushion of about 20 pips, 20 or 30 pips, perhaps, in some cases. Whereas if I were looking at, say, the 5-minute chart, and I drew my zones based on the 15-minute chart, maybe those zones would only be 5 pips wide, 6 pips wide, something like that. So there is a little bit of wiggle room on these. But overall, these are the spots where I look for reversals. So in this case, we have our big shadow, and it has space, which is really what we want. And you can see that space right here, where if I look to the immediate left, we don't have much price action happening in this area. So that means that this formation is a big shadow with space. The other thing is that, of course, on a bearish formation, I want to see this candle close as low as possible, right? Another thing I want to, obviously it has to print on a support and resistance zone. It should definitely have space. So for instance, this, let's compare that one to this one down here. We've got another one down here, another big shadow where it completely engulfs the prior bar. It closes quite low, I suppose, on the bar. Could have closed lower. And it's up near our zone up here. Now it's a minor zone because it's a blue zone, but it's still a zone on the chart. But it doesn't have a lot of space. It has a little bit of space. There hasn't, it's been 1, 2, 3, 4 bars since price traded there. Compare that to this one where we see a lot of space. It's been a couple of, over 10 bars since price last traded here. So that one has more space, and it's more desirable as I see it. Okay, so the other thing we want to see, and some traders differ with me on this one. Some traders will wait longer, but what I like to see is on the very next bar, it's got to go in the expected direction. My sell stop is going to be placed right below the low of the bearish big shadow. And these bearish big shadow bars should also be, they should be the widest range bar we've seen in quite some time. And that's typically the case. If the bearish big shadow isn't bigger than some of the bars we've recently seen, in other words, if the range between the high and the low is not as great as some of the other bars, then that's another thing that I'll use to sort of weed out my trades. And in this case, you can see that the bearish big shadow is, in fact, the biggest range we've seen in quite some time. Probably going back to, we'd have to go all the way back to, I don't know, maybe this bar, or even further, perhaps all the way back to here. So that's a really good idea. Harley's asking about, is it a good idea to divide price into more manageable targets with these lines? I don't know. In other words, are you asking about, no question? Okay. All right. Yeah. So you're talking about taking profit in places that are a little bit closer than this. Yeah, in this case, the first target is only 50 pips away. The second target is all the way down here at 160 pips. But let's get rid of this one, and let's get rid of this one too. So the other thing we want to see is on the very next bar, we want to see it trigger, and that's what's happened here. In this example on the euro, I would stick my sell stop at, say, 1.3238. And on the very next bar, it should push through that sell stop. If it doesn't, I'll remove my order. So if I'm trading the daily charts, I give it 1 day to trigger. If I'm trading the 4-hour charts, I give it 4 hours, and so forth. Now, some traders will disagree with me, and I would encourage you to really back test this and see what sort of works for you. But for me, I've found that if it doesn't go immediately, I generally don't want to be involved in the trade. Jez is asking, would you wait for the bar to close on the same 4-hour chart, or go to, say, the 1 hour and enter a bit earlier? That's a wonderful question. Now, I appreciate that, Jez. I actually won't do that. There are tricky, advanced ways of trying to get into these trades, but that's probably one that I wouldn't do, and I don't do. I just stick to my time frame, my 4-hour chart in this instance, in this example. So that's really, yeah, that's how I do it. I know that some people do that, But yeah, but I don't. This is an interesting bar right here. What's interesting about this big shadow is a couple of things. One, it is a bearish big shadow. You can see that the high is greater than it's an engulfing bar, what some people call an engulfing bar. The high is higher than the previous bar, and the low is lower than the previous bar. But it's not on a support and resistance zone as I've drawn on my chart. It does trigger on the very next bar. So let's see, if I had my sell stop right around here at 1.4198, it would have triggered. It would have also retraced quite a bit. I put my stop on the other side of the bar up here. So I wouldn't have been stopped out. But there are a couple of, it has lots of space, right? Like we can go back a long ways on this one. In fact, we can go off the chart. We don't see anything there, so that's great. So it has wonderful space. The bar is technically, it's a big shadow. It's bigger than the previous bar. It did trigger on the very next bar, but it's not on a support resistance zone. And the other problem with this one, as I see it, is that the big shadow doesn't have a greater range than 2 bars prior. So this bar here has a bigger range than our big shadow. So that's another one that's unfortunate. So I probably wouldn't have taken this trade. See, my zone was all the way up here. If it had printed up here, it would have been great. Yeah, so Lancer, yeah, that's right. So what happens is I just stick the stop above the big shadow. That's right. That's exactly it. So these are the rules. We look for space. We look for this formation on a zone. We look for some space. We like to see it happen in the very next bar. I think I can see possibly another zone here. And our stop goes on the other side of the big shadow. That's exactly right. The profit targets. Now, profit targets are a tricky thing. You know, I know a trader that's been trading big shadows. He back tested this system before he started using it. And I know it sounds crazy, and this is obviously not this is obviously you know, he used a back testing sort of software to test it out and see how he did. He started with a $10,000 account in his back testing software, and it went to $2 million on one currency pair in like 2 years. It went over $2 million actually. He was risking only 2%. So it works for him, and it certainly does work for me. I've got a few more questions here. Nicholas is saying, what do you use to filter trades like the ones you don't take? Yeah, the zones are support and resistance. Yeah, that's right, Donkey. Support and resistance. What do you use to filter the trades that you don't take but work? Well, if they work, then I just scratch it up. You know, I give a lot of trades a miss. You know, there are a lot of trades that I don't take. Oftentimes, a lot of what I do is decide, no, that trade's no good for me. And some people have a hard time with that. For me, I'd much rather let go of successful trades or trades that worked out than take a trade that's like okay. I'd much rather let some trades go that work out than to take a trade that's a bit dodgy looking. So for me, I just wait for the very best ones. Might only be one a week on the daily charts, or 2. Manoj says, how many pairs are you watching at any time when scanning for these opportunities? AT, the lines are support and resistance zones. That's what we're looking at here. Those are the dotted lines, and you can sign up for the free. There's a free course that Trader's Choice FX has, and There's more info there. You can email me anytime. highpipdiet@gmail.com. I can certainly help you out. But basically, these are just support and resistance zones, and we draw them based on line charts. Line charts really help people see these, and they pop out on the line chart. Yeah. Manoj is asking, how many pairs are you watching at any time? Well, I think I'm watching like 20 pairs. That's it. I just watch 20 daily charts. And it's pretty simple, really, because for me, living in Asia, my daily chart, obviously, for most people, this is the case where Asia is the first session of the day in Forex. So when I wake up, my daily charts are closing, and I kind of know what's going on in the morning. I say, oh, we've got a trade. And I prefer to see these trades triggered during the European session and really get some push behind them. So, and that's usually the case on the daily charts, right? If you're trading 4-hour charts or 1-hour charts or something like that, you probably will get some action on those, especially on the yen pairs and the Aussie dollar and stuff like that during the Asian session. But for me, I like to see it really give a good push during Europe. And that's generally the case. The other interesting thing about the European session, of course, is that we often see the European session will often the Asian session will retrace a bit, and then we'll see it really run in the expected direction during the European market. So, for example, let's look at this daily bearish big shadow. Oh no, this is not a daily. It's a 4-hour. Let's go back and look at the daily and see if we can find a bearish big shadow here. Here's one. Do you have a bad week? Are you minus? Yeah, I have bad weeks all the time. I usually have about 1 or 2 bad months every year, but overall, most of the time I do okay. Jez says, I'm sorry, seems to draw you back. On what time frame do you draw the lines? Jez, basically it doesn't really matter, but what I like to do is draw my zones on a higher time frame than the one I'm trading. So if I trade the daily, I'll look at weekly zones and draw those in. If I trade the 4-hour chart, I'll look at daily zones and draw them in. Harley says, if you don't use other technical indicators, how much importance do you give to the candles? Well, the candles are very important. Harley, for me, it's all about the candles. I mean, when you think about it, it sort of makes sense. The humans, I'm a psychologist by training, right? I mean, I just trade now. But I will, Eric, I certainly will define it in just 1 second. See, humans, to become an expert at something, you really need to have a lot of exposure to it. So it takes about at least 10,000 exposures. In other words, if you want to become an expert at the unicycle, you got to jump on a unicycle and you've got to do it 10,000 times. And then once you do that, you're on your way to becoming an expert. So for trading, if I want to become an expert at technical analysis, in other words, just trading off the chart, which is what I do. And if you're into fundamental analysis or some sort of hybrid trading where you're looking at both technical and fundamental analysis, obviously I don't need to tell you that Trader's Choice or that FX Street is a great place to go. I mean, there is a boatload of information here on the fundamental stuff. So if you're into that, then it certainly is a great place. Again, I probably don't need to tell you this, but if you're into reports and opinions and all that stuff, you can't go wrong at this place. So the only one that I really pay attention to, though, is this page right here, the world interest rates. And for me, the real easy pickings, and we do this on the third Wednesday of the month. We have a session in the for the paid members at FX Street, the paid webinars, and we talk about the Aussie. And one of the reasons why I like trading the Aussie is simply because it's just easy pickings. The Aussie is the current carry trade. So the world's money is flowing into Australia. The interest rates are going up, and it's an easy currency pair as I see it to trade. So you can find really good buy opportunities on that pair, at least at the moment. Okay. Walter, I've heard you say that you have spent many years losing money. Yep, absolutely. Do you have any strategies that you can warn us against that you found especially lousy? Manoj, that's a really interesting question. I actually think that most traders go through a sort of a similar progression, and I don't that I'm any different. So most traders will go through a progression of first looking at entry systems, and then moving to exit strategies, and then sort of finishing up with trading psychology and money management, which is sort of the same thing, really, as I see it. Money management and trading psychology is two sides of the same coin. So, and I'm no different. And so, in the beginning, what I did a lot of is running through what I call the cycle of doom, which is essentially giving up on trading systems left and right. And it can be frustrating, of course, but it's something that a lot of traders have to go through. So I don't necessarily say, watch out for this or watch out for that. The only thing I say is that because I know it takes 10,000 chunks of attempts for me to become an expert at something, I just decide, well, I may as well become an expert at just naked charts. I may as well do that and sort of make it easy on myself. Jose says at the rate of 10,000 views of daily charts, it'll take me 27 years to get this trading thing going. Jose, I'm going to give you a hint here, and this is something that I and the traders I know, we all do this all the time. One really cool way to give yourself some a head start on this is to backtest. And there are lots of software programs out there. I'm not here to sell you anything. I don't have anything to do with any of those, but there are some that I can recommend if you email me. But you don't need that. You can just go to traderschoicefx.com, get yourself a demo account on MetaTrader, and you can get your chart set up to however you like. You don't have to do exactly what I do, whatever makes sense to you. But what I do is I'll just get my chart like this. I've got my zones on here. I hit the F12 key, and I wait for a big shadow on a zone. And when I take that trade, I record it in my spreadsheet and just go on from there. Past does definitely not guarantee the future. Absolutely, Boyke. But what the past results do for me is they give me confidence that, let's say that humans, in the markets, act a lot like they do now in the future, then obviously I'm going to feel a little bit more confident going into my trades. So what I would do is something like this, which is what I'm doing right now. Boyke's asking if I consider economic data releases. The only one I really consider is the non-farm payroll, Boyke. And sometimes it really, so in other words, I don't like taking trades during the non-farm payroll. In fact, it kind of upsets me because I've missed out on, let's see, I'm going to go back to the Aussie dollar here. Here's the Aussie dollar chart. And you can see we had a big shadow down here at 95.03. So the 95.03 big shadow, again, the definition of a big shadow is that the bar completely engulfs the prior bar, that it has some space, that price hasn't been in this area for some time, if we look to the immediate left, and that the very next bar triggers my order. So my stop loss in this case on this trade went below the low at 95.31 on this bullish big shadow on the Aussie dollar. My buy stop was up here at 97 or 97.05 or something like that. It was triggered on the very next day. The problem is we ran into the non-farm payroll. And so what happened was, which was this big giant green bar a day. So what happened is I really tightened up my trade on that one and dumped it. And then unfortunately it just ran another, I don't know, it ran another 160 pips after that. So that's basically the answer to your question, Boyke. I basically don't trade during the non-farm payroll. I like to be flat during that. That's it. I've got a few more questions here. So yeah, so I can't say that there are any trading systems that are better or worse than others. It really comes down to working on what makes sense for you. And for me, what makes sense is to back test and get some confidence. So Launcer says, how do you spot a breakout? The price reaches the red line. It seems to go up. What do you do? Well, Launcer, on these charts, when you think about it, there are two ways you can spot a big shadow trade. One is that you see a breakout, so price runs up against the support and resistance zone, and then seems to suggest it's going to break out and go beyond it. And another is when price comes down to a support and resistance zone and seems to suggest that it will turn around and go the other way. So there's two sorts of trades really. When you get up to your support and resistance zone, you're either going to see a breakout or a reversal. And as I see it, the big shadow really lets me know which is more likely. So, for example, this one right here, this bar right here, is a bearish big shadow on support. So it's actually on this blue zone here. So it actually is saying that it's going to break beyond support and fall lower. So it's not really a it's not really a reversal. If it was a reversal, it'd be up here on this red zone up here where it was butting its head against that zone. Instead, it sort of broke through and found support and then suggested that it would fall. In fact, it did fall. It did break. I would have had my stop loss up here at 29.65, 1.2965, my sell stop here at 1.2846, and you can see it never made it to the next zone here. That would have been a losing trade, a break-even trade at best, most likely a losing trade. So that's an example of sort of a trade where you're expecting it to sort of break, and then you'll see other situations where you're expecting the market to reverse. Let's see if we can find a. So Launcer, I can also send you like the ebook on this. I've got ebooks on this. You can go to Trader's Choice FX. We've got a course there as well that's free. Alex says, do you have any rules like ratio 3-to-1, etc.? Alex, that's a great question. I'm assuming you're looking at your risk to reward ratio or something like that. Yeah, not really. I don't really have any rules for that. Harley says, so you're looking for long wicks to reversal to enter. Actually, I'm looking for big bodies of candles. So I'm looking for a big engulfing, what some people would call an engulfing candle. Those are the ones that I like to see. Do you ever use related pairs? So if you go bullish, the big shadow on the Aussie dollar, would you simultaneously look for a bearish big shadow on the CAD? No, I treat these as separate menage. All these currency pairs are really separate as I see them. Eric says, do these work on any time frame? Absolutely. Yeah. Yeah. Any time frame will work. Again, I think the most reliable thing is to move one time frame higher to draw your zones. Jez says, for a newbie, how many pairs can one start with? Jez, if there's one piece of advice I can give you, just based on people that I know and successful traders that I know, it's that the really good successful traders are specialists. So they specialize in something, whether it's a currency pair or a trading system or whatever. They just do one thing. I mean, there are hedge funds that are based on one trading strategy, and that's it. So, and the other thing I would certainly say, Jez, for a newbie, is to backtest. And when I'm talking about backtesting, I'm talking about most people I know are discretionary traders. They don't have computer programs trading for them, so backtesting looks like this, where you're just hitting the F12 key, or you're using some software to help you backtest, and you're running through hundreds and hundreds of trades. Again, the idea being that if we can accumulate at least 10,000 trades, then we're getting to that level of expertise. That's the idea. And we can do that much more quickly by backtesting than we can by waiting, and taking, live trades in a demo account or something like that in the market. Nicholas says, I know you use naked charts, but if didn't, what indicator would you use? Nicholas, that is awesome. That is the coolest question. But yeah, Boyke says after 10,000 we're professors. Yeah. Well, I suppose it depends on your definition of a professor. Some professors are better than others, I suppose. Nicholas, that is the best question. I know you use naked charts, but if you didn't, what indicator would you use? Oh, that is classic. I don't know, Nicholas. I suppose I have a soft spot for the MACD. Ian says, can you explain how you put the lines in the chart? Yeah, sure. Jose says, do you trade to the next zone as your take profit? That's the simplest way, Jose, is just to wait for it to go to the next profit, to the next support and resistance zone. Do you trade with the trend or counter trend, says May? Both. So breakouts or reversals are fine with me. Yeah, Boyke. Oh, we're professors. Okay, so let's do another one, guys. I think it'll be fun. Any requests? Any currency pairs you want to look at? Anyone have a preference? There are certain ones that I don't have on here, like the Kiwi yen or something. Euro yen, gold, dollar yen. Pound dollar. Okay, we got a couple pound dollars. Let's do that one. Time frame. Does anyone want to look at a certain time frame? Is there a time frame that anyone prefers to see here? 1 hour, daily, 4 hour, 4 hour, 4 hour. Okay, let's do 4 hour. All right. So here we are. We've got the daily pound, and we'll look at the 4 hour chart on the daily pound. So what I'll do first is I'll look at drawing my zones based on the daily chart before I drop down to the 4 hour chart. So that's how I guess. So I'll draw my red ones in first. The obvious one, the extremes, right? So our extreme zones, where we have extreme touches, I'll put zones there. So I'm just going to draw my daily zones with red, and then I'll drop down to the 4 hour chart where I'm going to trade, and I'll draw in a few more with blue, just to remind me that my red ones are based on the daily chart, and my blue ones are based on the 4 hour chart. Wow, look at that. I drew this one in an extreme here, but if we go back on the chart, we can see it's got multiple touches. And again, these things will become more apparent on the line chart. The line charts often make it easier, especially when you first start out going naked. So here we've got some touches as resistance here, and we've also got some as support. And that's really what we like to see. I like to see support and resistance, right? The only exception will be those extremes where price hasn't been there in a long time. Okay. This one's a little bit tricky. I might look at the candlesticks to see. And probably going to be one around here too. Okay, so there we go. Now that's my dailies. I actually think that there's going to be one here too, where we've got a lot of touches here. And I would look at this as sort of a, this formation here. Unfortunately, it's not a big shadow, but it's sort of a fake out. It broke through, tried to find support, and just fell. It's possible we also have one here, right around there, perhaps. We've got some touches here, some close. The price actually closed here, and some touches up there. So that's it. So this is it. Now I'm going to go down my 4-hour chart, and I'm going to draw a few more zones. These will be in blue, so I'll know that these are the 4-hour ones. There you go. Right there. There's one. Looks like we probably have one around here. Now sometimes you'll get an area like this where it's a little bit messy. Right, and I'm talking about, of course, this area right here in gray. That is a little bit messy. So what I'm going to do there is I'll go to my line chart to see if I can see some touches. Yeah, and it looks like it's a reasonable fit, but sometimes because the line chart, of course, is just the closing price, right? That connects the closing prices. That's what the line chart is. So that looks pretty good. But sometimes you'll get a situation like that where it's found support and resistance over and over again that's what I'll do in that case. And we probably have one here, somewhere around here. Got some touches, support, a few more supports. Okay, so this is where we're at right now with the pound. So I guess the question is, what would we be looking for? I would be looking for the pound to come down to here, to 1.5320. And then I'll look for a big shadow right around here that would tell me that, okay, it's coming back up. So Harley said, so you save the charts until the level becomes irrelevant or redo them each day. Yeah, I just leave these zones on here. Harley says, do you ever watch pivot points? No, I don't really. No, that's not. For me, it's just, and I'm sure pivot points probably line up with support and resistance at times. So that's it. So I'll just leave them on here. The only time I really redraw my charts is if let's say, for example, on the Euro Aussie, like, you know, the Euro Aussie is crazy right now because it's the Euro CAD. Where's the Euro Aussie? Here's the Euro Aussie. So the Euro Aussie is crazy right now. So it's you should see the Euro Aussie now. It's a black chart. Basically, you know, on my chart, it's off the chart. So sometimes what I'll do is I'll go and find another data feed or something like that because I don't have any historical lows down here. But yeah, so when price has really gone like to the extreme or something like that, then that's the time when I'll maybe redraw my zone and basically I'm looking for something. The other thing you can do when you're at an area where you haven't seen, and this is about the only time I'll use something other than support resistance, is if you haven't seen price go down or go up to an area on your chart, what I sometimes will do is I'll draw like a Fibonacci levels and look for a Fibonacci extension in that area. So that's one thing I might do. So for example, if we were to look at the Euro Aussie here, we'll look at the Euro Swiss in just one second. So here's the Euro Aussie, and if I look at this move from the high up here all the way down to the low down here, which incidentally on the daily chart was a daily big shadow right here, right on our zone. That was a daily big shadow back in September. Looks like it's September 10th of this year. But what I'll do is I'll draw something like that, and then what I get is a Fibonacci extension. So in other words, I could have synthetic support down here at 128.47 on the Euro Aussie. Can we? Launcher says, can we switch to a candle chart? Yeah, sure. That should do it. Jose says, how close does price have to come to a level to start looking for a big shadow, or must it touch it to be valid according to your plan? The leeway I have is going to vary depending on the time frame, Jose, which this is a good question. So on a daily chart, I might have 20 or 30 pips cushion, where if it gets within 20 pips, it's counted as a touch. Whereas on a 1 hour chart, it might only be like 5 pips or something like that. Let's look at the Euro Swiss. So here's the Euro Swiss. Let me refresh. No worries, Jose. Okay, so here's the Euro Swiss. Well, we haven't really had anything on the Euro Swiss in a while on the daily chart. We did have this. You can see here this yellow arrow indicates a bullish big shadow, sort of a breakout one. And this is back in. This is all the way back in November 12th. That one wasn't ideal though. It did have some space, but there were a few bars to the immediate left. So it was a big bar though. It didn't make it all the way up to the zone. But what it probably made it up to what I'd consider a minor zone, this trade. And the reason why I say that is because see where these bar lows are here and these bar highs over here? If we looked at this on a 4-hour chart, I guarantee that we'd see that area stick out where all these bar highs seem to congregate and these bar lows here. So that trade did trigger the very next day and it did go up, but it didn't make it all the way up to our next zone. On the Euro Swiss, I don't know if I don't really see anything. I don't have any zones all the way down here. So I'm not sure what's going on the Euro Swiss here. Yeah. I'd probably draw another fib. If I were looking for support down here on the Euro Swiss, I would probably draw another fib, and I'd do something like possibly here. So I draw from this high here all the way from that high all the way to that low, and I'd see that we've got the 161 all the way down here at 120.49, so that's like 420 pips away. That's crazy. Let's look at the Euro daily. Yeah, we were looking at the Euro. Let's go back to the Euro now. All right. So the Euro daily, that's a 4-hour, isn't it? Here we go, Euro daily. So on the Euro daily, we may have had a big shadow here on the Euro. I'm not sure that the low was lower though. It might not have been low enough to make it technically a big shadow. But on the Euro daily, I'd be looking for again. We'd be looking for it to go down to 1.2985. That's probably where I would expect to see some possible support down here. Also, we're at a sort of a minor zone here where we are right now. So on the 4-hour chart, we could see some support here. But I think the daily chart, if we're looking at the daily chart, unless it does a really giant move up, like in the next, 7 hours or whatever, 6 hours, then we're probably not going to see a signal here. It'd probably have to be down here at 1.2985. That's what I'd say on the euro. And I will definitely watch that area. I think the euro is ripe for a buy. I think if I see a big shadow down here, I will not be, I won't be shy on that one for sure. Yep. And I just want to point out here that Trader's Choice FX is the group of people, and Trader's Choice FX and our good friends here at fxstreet.com have made this possible. If you want, you can go to this here. If you want, you can sign up for the free course. Eric says, thanks for using for the tip to find your support and resistance levels. Yeah, the line charts work really well. If you have any questions, anybody, if you have any questions, feel free to email me, highpipdiet@gmail.com, and I'm happy to help you out. I can give you an ebook. You can go to Trader's Choice FX. You can sign up for this free course where we've got, a lot of stuff about simple trading. Thank you very much, Vicky. Thank you, everyone. I hope you have a great holiday.